Zach, it's interesting, Jared highlighting Moderna there, but we got that note from Goldman Sachs today, raising their assumptions or baseline assumptions for 2021. One of the key things they're looking at, though, is the expectation of approval from the FDA from one of those key vaccines, though Goldman doesn't name specifically which one. But we're looking at here, Goldman saying S&P 500 could rise by as much as additional 11%. 4,100 by mid-year on the expectation of a potential vaccine coming to market.
Yeah, and I mean, you look a year beyond 4,300 in terms of where you look at year-end 2021. I think it's interesting when you think about the timeline to that vaccine, because we were talking about this yesterday. And one of those names that's hard to hit here, trying to weather the storm, AMC. Trying to forecast out how much runway they have, looking to kind of hit that problem area in terms of their debt load by February. We're seeing them issue shares again. It's the key question. And Goldman also in that note kind of broke out some of those names that they screen for in the value space that still has some room to run when you look at the gap between the forecast level of consensus 2021 earnings per share and the level of pre-pandemic profits in 2019. On that list, you're going to see a lot of those names that look a little shaky, the cruise line stocks, but also some of those bigger names that we haven't talked too much about. Disney, obviously they have their struggles with the park business, but that being one to look at there. The airlines also on that screener list. I mean, obviously they're pointing towards opportunity and value, which is what we've been discussing pretty much all week here. But interesting because the cash position for some of these companies, I think, will be the key factor when we think about where investors are going to be looking at in the value space, but maybe that's just me.
And to your point on Disney, we've got their earnings, so we'll be watching very closely to see how things shake down there. But, I think it's interesting. The counterpoint to all of this is what we heard from Neil Shah, our guest earlier, as well as Dr. Osterholm, who made it very clear that, yes, there is optimism for a vaccine, but in the meantime, as the doctor described it, you've got 3 months of COVID hell. And I keep wondering with the vaccine, how is this going to be administered? What is the process going to be? And to the point of these stocks, I mean, how profitable are they going to be for these individual drug makers? So there's still a lot of questions. We've seen the vaccine optimism really drive the market so far this week, but you can't help but wonder if there is a little complacency right now at a time when we are seeing a huge surge in these COVID cases, 100,000 or upwards of 100,000 daily case counts.
That's a really good point. And you think about how much Pfizer said that they could get out by next year. It's going to take 2 doses, and it's obviously going to go to those frontline workers and susceptible populations first. So it's not as if everyone's going to be vaccinated, I think, as soon as some investors out there are hoping. And to your point, I mean, obviously the upside is being laid out here by Goldman Sachs, but for some of those value names, I mean, if they continue to dilute the upside, what's the benefit of seeing a gap here in terms of forecasted earnings per share in 2021? If you keep issuing shares out there, there's not going to be a lot of upside to capture. So I think that's something, too, that might be overlooked. When we look at these year-end targets, obviously, you're looking at the total market here, and Goldman Sachs clearly a little bit more bullish than we've seen them in the past. But still, I think individually, a lot up in the air and breaking out which one of these might be the best opportunities on the table now.
Yeah, Goldman lifting its year-end target to 3,700. We're seeing the S&P 500 trading at 3,576 right now, so an upside of 4% or so.